Thank you all for coming. I think you guys all know me, Janice Gerardi. I used to work here, I used to be an agent. Today, I want to talk a little bit about reverse mortgages. I'm also going to talk sort of in general about mortgages. This is going to be kind of fun and it's a totally open dialogue, free. Ask any questions if I'm talking in acronyms or industry speak or anything that you don't understand, just ask questions. My goal is to really help elevate you guys be trusted advisors. So not that you have to know everything about mortgages, but if you know enough to like see a different opportunity that you might not have before, or help guide your clients a little bit better, it's always making you look better in front of your clients. And to also get the juices flowing to see if we can get some more transactions out of it as well. So I'm going to...
Sorry, is
this
recorded?
I don't know. I think so.
Yes, it is recorded.
Thank you. Ira, is there anyone on Zoom?
No.
Okay, hello everybody.
Nice to know.
Yeah, all right.
Oh, but
This isn't like an in-person thing. There's no.
No Zoom at all.
Oh, there was no Zoom?
No.
Oh, okay. All right, so we started now?
There is no Zoom pizza.
You have started.
yeah, exactly.
We have started, okay. So, and let's get going. Hold on, let me just see. There we go. So I'm gonna do it kind of a fun little game style. We're gonna talk a little bit, as I said, basic mortgage information. And through the whole thing, we're gonna cover, there's a lot of press out there and there's a lot of misnomers about what a reverse mortgage is and what it isn't. And what the options are for you guys to get more transactions. So we're gonna start off easy. And feel free to just fire out questions. So, and I've got prizes too. So yes or no, does anyone think that large banks care more about their clients than they do about their shareholders?
No.
Yeah.
What's wrong?
Yeah. So, and I always just throw this in because it also just leads into why a mortgage broker is different than when your client says, oh, I've gone to my bank. Always get them to get a second opinion at a mortgage broker, because a bank can only, they've got this little square that they've got to fit in, it's cookie cutter, and it's like going to a car dealership. They're only going to show you the car that they have, versus a mortgage broker is going to understand your client's needs a little bit better and dive into what are their goals today, tomorrow, 5 years, 10 years, and set them up for success on what the best product is. Maybe they don't have typical income, they need like different ways to qualify. So always get, if they're like set 100% I want to work with my bank, great, then say, get a second opinion or get a mortgage broker to back up what that the bank is actually doing something in your best interest. Okay, which of these scenarios do not qualify for a mortgage? If somebody's got like really bad credit, they're new to Canada, they can't qualify with a stress test, or they're temporary employees, they don't have regular income, which one of these scenarios do you think do not qualify for a mortgage? Any suggestion, any ideas?
When you say new to Canada, what do you mean?
That they like the work permit, PRs, they're just like, yeah, they just got here.
Bad, good,
A,
really
C.
bad.
See?
All right,
See,
A.
nothing.
yeah, trick question. There's always a solution for somebody. So with a mortgage broker, like I have access to probably 40 different A lenders, a bunch of B lenders, and then like hundreds of privates. So it might not always be a perfectly viable option, but there's always a solution for somebody to help if they're A, in trouble, they want to consolidate, or there's always a solution. So always get their questions answered.
I have a question.
Yeah.
As someone who's a sole proprietor, don't you need to have been a sole proprietor for like 2 years in order to qualify for mortgage?
Not necessarily. So there's different programs. There's what's called self-employed enhanced, where you don't have to have a 2-year average. You typically have to have at least one tax year. But then there's also programs that are stated income. So if you can show like bank statements of money coming in, sadly, commission people, car salespeople, real estate agents, they're like the least favorite of lenders, let's put it that way. So those are the trickiest, if you don't have consistent sales or cash flow. And that's a lot of times you do need to have a 2-year average. If you're self-employed but not commissioned, you can do it under 2 years. If you're commissioned, you need, unless, there's always sometimes exceptions. So every situation's unique. Great question, but always just get a specific scenario, as an answer to that specific scenario, but sometimes there are exceptions. Okay? All right, still in the easy round. This might be easier, not, I was thinking about moving this one. Okay, so you know how people say you can buy a house with 5% down? So let's say you want to buy an $800,000 home. True or false, 5% is $40,000. Can you buy this house with $40,000?
No,
False.
All
no.
right, good job, everyone. Yeah, the rules changed a couple years ago. It's 5% under 500. And then it's 10% from 500 to a million, and then over a million, 20%. So in this scenario, you would need 25,000 for the first 500, and then 10% on the next 300 from 5 to 8, which is 55,000. Yeah, so that's always, when you're talking to your clients and they're like, oh, I want to buy 5% down, just remind them of this. This is always a good, it might change, it'll save you guys time too. You don't want to be going out and looking for somebody at 800 when they don't have enough money for a down payment, because then they have to have closing costs on this. And then also mortgage insurance too, if it's less than 20%. Okay? All right. In this scenario, you buy an $800,000 condo, but they've got $200,000 down payment. Is this considered a conventional mortgage, an insured mortgage, insurable, or the obvious? It's a bad idea if you don't use a portfolio agent. Anyone have an idea?
Conventional mortgage. Conventional mortgage.
Okay, it's an idea. Why not idea? Anybody else? It's actually an insurable mortgage. So when you hear these terms floating around, conventional is when it's over $1 million, you have to have 20% down. That's called a conventional mortgage. Insured and high ratio are kind of interchangeable. That's when you have, well, that's when it's under $1 million and you have from 5 to 19.9% down payment. That's conventional, or sorry, insured or high ratio. Sometimes an insurable mortgage is when it's still under $1 million, but you have anywhere from 20% and above down payment, but the house is still under $1 million. And the reason, sometimes people also refer to this as conventional insurable. So you might have heard that term. But this is kind of important because anytime a house is under, this is why, this affects what the rate is. Because rates are always different, whether it's high ratio, insurable, or conventional, the rates are always different. And the reason is, it's all about, for lenders, it's all about risk mitigation. So the less risk, the better the rate you're gonna get. And you're gonna get that with insured high ratio because they're paying that insurance premium, they're paying that CMHC fee, right? Now, if it's insurable, if it's under $1 million, that premium is still due, but the lender pays it, the insurer does not. So people are not gonna walk away from a home when they've paid that insurance premium and it's guaranteed. So that's why rates are different. So I just wanted to throw that out because you've heard these terms thrown around. It's always a good idea to know what it is. Okay, we're gonna get into the meat of this. Does anyone have any questions on like general mortgages? That was just sort of like super high level. This is all about the reverse mortgages now. And as you can tell, instead of me just sitting here telling you what it is, we're gonna get all the information out through kind of a series of questions and stuff. So if, at the end, if your question isn't answered, if you had something burning, just fire, you can ask me afterwards, or during, doesn't matter. So true or false? When you have a reverse mortgage on a property, can you break it with little or no penalty, or any penalty? What do you guys think?
Yes.
False.
Yeah,
False.
it's true, you can. There's 4 different lenders that offer reverse mortgages. Before there was just the one that was widely marketed it on TV. Each of the 4 have kind of a different little sweet spot and a niche. And some of them, like the Home Trust one, the one that they're advertising, that's crazy penalty. Like if you think you can't treat that one as a short term because their penalty's like 5% of the balance, like it's crazy. Whereas in the first year, like it's 5% of the outstanding balance, which just doesn't make any sense. You would just sell your house, or you don't really want to break that mortgage. Whereas other ones might not have any penalty in the first year, and others might have like 4 or 5 months of interest as the penalty. So it could be from 0 to a ton of money, depending on the lender that you're using. Okay, multiple choice. What do you think, could you use a reverse mortgage to buy a second property, to be able to gift money to your family for them to buy it, to pay off debt, or to, if they're thinking of downsizing in 5 years, they can purchase a home now for future?
I think
All of them are true.
Yeah, you guys are on to me about the trick questions. They don't care what you use the money for in almost any scenario, right? Because as long as the house is standing, it's in good shape, they're just letting you have the money, you can do what you want with it, all right? Okay, a little trickier. I'm just gonna start giving out some prizes. I'll give a prize for this one. Out of the 4, reverse mortgages can be used to blank, or to blank, and is not. Anyone have an idea of what any of that might be?
To buy. Can be used to.
I'll give you a second.
to buy, to rent,
To
or
refinance, to invest, and it's not cash. It's not taxable.
So close, you get a prize. You can, I don't know if you guys want to come up and like look at the prizes. If someone like dogs, I got a dog notepad of a flask, water bottle, I think these are gloves, a charger with all the different adaptations, or if someone's a tennis or chocolate lover. Anything you want? Come on. Okay, thank you for that. That was such a good effort. Okay, so reverse mortgages can be used to purchase, to refinance, to consolidate debt, and it's not taxable income. So that's kind of important because you can get reverse mortgages, it's a typical mortgage. It's just how you get the money is what the different part is. So let's say you put a $400,000 reverse mortgage on a property. You can take that $400 all at once. You can take it like $100 a year. Like you can take it like an annuity where you can get money quarterly or monthly. The key is it's not taxable income. So if someone's on a pension, and if they start working or start getting income, then it might adjust their pension. So this is not taxable. So that's kind of a big deal for some people that are looking to just help improve lifestyle. Yeah. You want to take pictures of it? Yes. Let me know when you're done. Good? All right. Another multiple choice. So reverse mortgage can help an agent get more transactions by all of these scenarios except which one? Any ideas? It's also checking to see if you're actually reading it.
again, everything.
My dirty one.
B.
I wish you
That would be B.
could do that.
Yeah, right? So this is just like an example of how you actually can get more transactions. So if someone's looking to downsize, you're actually helping them, you can put a reverse mortgage on a property to pull out money for the down payment. Then you're gonna sell their property and help them buy new ones. You're gonna get 2 transactions out of it. If it's like a gray divorce, as they call it, like if it's amicable, you could get 3, right? They could sell their primary residence, get reverse mortgages for the other 2. You get 3 deals out of it. Or, 1 deal if you're helping a family member, it's like an advance on their inheritance, right? That's a really big deal because a lot of times people, you can't just put a line of credit on a property to give, grandchild or a child a couple $100,000 for a down payment because you have to service that debt. The fact that you don't have to service this, it's payment optional, helps people be able to gift more and give that advance on inheritance a little bit better. So, yeah. Okay, true or false, you can get a reverse mortgage to purchase a rental property.
True. Why not?
Yeah, well, it's true with two caveats. Out of the 4 companies that do that, only one will allow you to use, or to use it to buy an income property. The other 3, it has to be owner occupied. But this is a really great opportunity for someone that's ever mentioned, like if you have clients that have houses that have some equity built into it, and they've just like hinted that they want to get an income property but don't have money for a down payment, this is a great option because it's instantly cash flow positive because you don't have to service that mortgage. So you're not like renting a property out for $3,000, but it's costing you $2,800 in another mortgage to do it, right? There's that $3,000 is pure straight cash flow positive. And then you get the interest is tax deductible. So it's a really great opportunity if someone wants to get into that market, start building some wealth, but doesn't have the ability to service 2 properties.
How much of, for example, the example you gave, how much of the 3,000 rent can be qualified as income to purchase a rental income property?
Well, if you're using your reverse mortgage on you wouldn't be able to use that for qualifying income because it's just straight up all about, because with reverse mortgages, it's qualifying income, it's not, or there's no qualifying income, right? It's just the property itself. So you can't use that $3,000 as you can with a traditional mortgage. Because if somebody's not putting a reverse mortgage and they want to buy an income property, you can, even if they haven't bought that property, you can use the future income for qualifying. And then it depends if it's a duplex and you're going to be living there, you can use 100% of that. If it's just straight up investment property, some lenders treat it differently. Some might look at it at only 50%, some might look at it 80%, 90%. Each lender's a little bit different. So they treat it differently. Like with my clients, if I know that if they're really close to the ratios, I'll only present their deal to a lender that will use 90 to 100% of the rental because they won't qualify at 50.
Right.
Yeah, but it doesn't apply in a reverse mortgage. Okay, harder rounds, hardest. So qualifying for a reverse mortgage is based on which of the following? So as with a traditional mortgage, all of this applies, right? You have to qualify for the stress test. It's all about the ratios, your income, your down payment, all that kind of stuff. So which ones do you think?
B.
Okay, almost right. It's A and B. So the age is really important. With a reverse mortgage, they'll only ever go up, some will go up to like 55, 60% of loan to value of a property. But it's all dependent on the age, and that's all because of like life expectancy. So if I'm 60, which I'm not, getting that on camera, I'm not 60. I'm almost there, I'm holding up my fingernails, but I'm not. But if I were, then, and as a female, if I'm gonna live to 95, that means I'm not making a mortgage payment for 35 years. So they're not gonna give me 55, 60% loan to value. They're gonna give me more like 15 or 20% because my life expectancy is high. If I'm 95, but I wanna stay in my home, then they'll probably give me the full 55, 60% loan to value because my life expectancy isn't gonna be much longer. So the 2 criteria, and they have like a whole metric and a little calculator when you go on their website. It's age, they don't care about the income. Minor income, because you have to be able to pay utilities, do minor upkeep, pay the taxes and insurance on the property. So something has to be coming in that scenario, they might consider rental income. But usually if they're older, there'll be some, your pension or something like that. So minor income, just to make sure that you can like maintain the property, got nothing to do with ratios or stress test, okay? All right. This one's tricky, this would be prize related. Reverse mortgage payments are blank, are payment blank, and you can blank up to blank annually. Any ideas? Yeah, I probably could have worded that a little bit better. This one's tough.
And you can pay up to blank annually.
If you get the first blank, you'll know what the other two mean. Anybody want to take a stab, and then it's a prize?
Reverse mortgage payments are
You can-
fixed, and you can adjust up to.
3 times annually.
Thank you for trying. You both can come up and get a prize. You're both wrong, but you can come up and get prizes. Yeah. Okay, so reverse mortgages are payment optional,
Oh.
and you can prepay up to 10% annually. So what that means is, if you get a $400,000 reverse mortgage, you don't have to pay a penny on it. Like, you don't have to, you can, the lender will give you $400,000, and then you never have to talk to that lender until like 5 years when the mortgage
It's like
renews.
secure line of credit, right?
Secured line of credit, you have to pay. You have to pay, you have to service that. So you have to pay the interest. And the difference is at any time they can call that, right? With a line of credit, at any time, a lender can say, you know what, I'm good. Like I don't trust you guys, I don't trust you anymore. You need to pay the mortgage. Let me tell you a scenario. This is a true story. A spouse dies, okay? So 2 seniors. Line of credit on the house. One spouse passes away, the bank automatically reduces the available line of credit because now there's not 2 incomes coming into the property. When that happened to my mom, not that she needs the money, but if she did, it was like, are you kidding me right now? Like, they had totally didn't need the money, it was just more insulting than anything.
Yeah.
She had a $250,000 line of credit on her home. And she had borrowed 90 for investments, but they cut it in half and said, oh, your line of credit available now is only 110. We'll give you an extra, we're leaving the 20. Like, they were gonna cut it right down to what she owed, the 90, but we'll add 20 in case you need living expenses. Like, seriously? So that's not the case here. So it's payment optional. You can prepay up to 10%. So what happens with a reverse mortgage? So 400,000, you don't have to pay the interest. So after year 1, instead of making monthly mortgage payments, that interest accrues. So at the end of year 1, that $400,000 mortgage now becomes, I don't know, let's say 415, whatever the number is. So now you owe 415, and then, but you haven't made a payment on it. At the end of year 2, you now owe 430. But it's all about like lifestyle, because you're able to use that 400 for whatever you want. You're able to pay up to 10% of the original amount. You're able to pay up to 40,000. It goes to the accrued interest first before it reduces the principal. So, and only one lender does that as well. So that's why every lender has a little niche. Some don't allow prepayments, some do. So that's why, depending on what the plan is and what you need the money for, then you can figure out what is best for you. Okay? Okay. A reverse mortgage is good for which of these following scenarios?
Me, Kurt, that's so random.
Well, he's the spokesperson for Home Trust, for CHIP mortgages.
Oh, yeah.
Yeah, he was supposed to be here, but he's like doing, I don't know, like Olympic skating prep, I don't know
I
what.
just love my.
So all of the above.
See,
All of the
for
above.
all of them, yeah.
Well, I don't think you're gonna meet Kurt Browning, but actually it's only for the last 2. Because one of the 4 lenders is not age related. So anybody in this room could get a reverse mortgage.
Right.
And they'll go up to 40% loan to value. And so they're really, it's a real sweet spot that if somebody's got, let's say they're not working, but they've got a lot, they want to buy a property, but they've got a lot of money, but they're not working. So they're not going to get a regular mortgage because you can't service that debt. But you could get a reverse mortgage at any age, and then, as long as you have like 60% down payment of that property, or of your own property, and then you can buy a new one, whatever. So it's not age-related.
Does it, affect your rate? Like, for example, if you have a fixed rate and you want to get the, reverse mortgage?
So reverse mortgages are a little bit higher than a regular mortgage for sure, but they're not, excuse me one sec, they're not crazy, they're not like private mortgages.
Okay, so what if, somebody, what if I bought a house like COVID time and interest rates were so down?
Yeah.
And now I want to borrow equity from it?
Yeah.
With my interest rate, because let's say I have 2 years left.
On your current mortgage and you want to borrow more money,
That's what I'm saying, so, let's say the renewal comes up in 2 years.
Yeah.
And now you want to get some equity out of
Yeah.
it, right?
Yeah.
So, you're paying in such low interest rate, but now they're crazy.
Yeah.
So would it,
so depending on, I mean, that's a very viable scenario. What I've been telling my clients now that have fixed rate, like, I had a client that had like a 1.74 fixed rate, and it's coming up for renewal, and I'm like, don't even look at it, like, wait till the last second, like 11:59 midnight that day, don't even touch that mortgage, because you're renewing at a higher rate. So what I would recommend is I would put everything like, if you can increase your payments now, and this is what I'm talking, all my clients that have fixed rates, for 2 reasons. One, start increasing your payments, because you're shaving off so much principal, so when it comes time to renew at the higher rate, you're renewing at a lower principal amount. And 2, increase the payment as much as you can afford now, because then you're gonna eliminate a lot of that sticker shock when you're renewing from 1.4 to 5.8, right? Like, that's a big jump for a lot of people. So you wanna get that principal down as much as you can, but you also get in the habit, like, if your payment's $400, if you can go to $600, $700, do that, because that extra $200, $300 is pure principal, and you're also getting used to renewing or you're also getting used to paying $600. So it's setting yourself up, you and your clients up for success for a little bit. Excuse me 1 second, sorry. Okay. True or false?
False.
You're well versed on reverse mortgages, but this changed. It's now true. Well, it's false in the sense that they're probably gonna take it away, but today, you could get a second mortgage behind a reverse mortgage, behind a regular mortgage or a line of credit. But it's a very unique scenario, so I should have circled both actually. It's a very unique scenario, and I was just talking to the business development manager for that lender. They're probably gonna dial it back because it's not been a really successful program. But it kind of is available at the moment if somebody was in dire straits. The problem is, most lenders don't want a reverse to go behind it because it never gets paid off, so they might not get paid off, right? So it's all about risk mitigation, as they're saying. Okay, I think there's only a couple more. So if you found someone that you thought would be a great fit for a reverse mortgage, what do you think out of all, this is not a trick question, there is a right answer. Which one of these do you think is the order of having to get a reverse mortgage? You need to order appraisal, you need to have 2 lawyers, 1 independent legal advice, and you need to submit income documents.
There is no stress test for this.
Income?
Why
I
do
thought
they
you
send
said
income?
income.
Income documents?
Yeah. There's no documents required for the stress test. I mean, they just want to see some income coming in, as I was saying before, this was more just to see if you guys were listening. You do need some income just to make sure you can like maintain the property. They will always 100% require an appraisal to be ordered. Even if you're borrowing $100,000, they're gonna ask for an appraisal. Because these are also government regulated as well. So you have to have an appraisal, you have to have 2 lawyers. So the second lawyer is the standard lawyer that's gonna do the actual transaction and register the mortgage. It's mandatory to have independent legal advice. And that's just to eliminate, family members trying to convince, a senile grandparent to give them $300,000, right? And they're not sure what's happening. So they have to get, and this is cost-wise, the lawyers that I work with usually just do this over Zoom and will charge probably anywhere from, depending how complicated it is, $350 to $500-$600 for that. But it's just to really explain to them what the process is and that they fully understand exactly what a reverse mortgage is and what it means to them in 5-10 years down the road. So that is, you can't get away from that in a reverse mortgage. Same thing with privates. You need to have 2 mortgages for a private mortgage as well. All right. Last questions. So after 5 years, the lender owns more of your property and your net equity has shrunk. What do you guys think?
False.
Yeah.
Could be between.
Yeah, it's mostly false. I'm going to give you an example of why that's true. It's almost like 95% false. It's about the same, or your net equity is slightly more. And I'll show you exactly why. It's because even if you don't make any prepayments, the interest is accruing and the mortgage is growing on a small percentage of the total amount of the value of the house. If your house is appreciating, it's on 100% of the value. Can you guys read this? So just for recording, I'll read it out loud. So here's the illustration. I've used the assumption that your house is worth $1.5 million, and you get a mortgage of $502,500. I was using a calculator, so it spit out that number I just left. I'm always about round numbers. The interest rate's 7.69, and the term is a 5-year term. Okay, so I'm using the example that a home in a general GTA will appreciate. I'm just using an average number of a 3% appreciation every year for a home, which I think up until the last year and a bit, that's even been quite conservative. Houses have been going up more than 3%. But if you use 3%, here's a scenario. I don't know if you guys can read this. So today, if you go on this side today, your home's worth $1.5 million, you don't have a mortgage on it, your net equity's 1.5. You add the reverse mortgage of the 502, your equity, 1.5 less the mortgage, is 997, 500, right? In the assumptions that I used, if you had 3% appreciation over 5 years, that home's now worth 1.738. This was actual numbers. The reverse mortgage hasn't changed, 502, but the interest accumulated and accrued is 230. So your mortgage technically is now, 732 because you haven't made a payment on it. So 1.7 less 732 is $1.6 million. So your net equity in that house is marginally the same. But your lifestyle's improved, you might have built more equity if you bought a second property, or you've allowed family members to buy a property. So this is based on 3% appreciation as well, right? Obviously, if it was higher, then your net equity would be going up. To be honest, I haven't done the break even of if it was only 2% or 1%, but this gives you a scenario. So the thing to remember, because the first thing out of everyone's mouth is the bank's going to own my property, or I'm going to own less of it than somebody else, or than the lender. Always remember, the interest is accruing on a small portion, the appreciation is on the whole amount, and that's why the numbers typically work in your favor over a period of time. Okay?
So in 5 years, the interest on 500,000 is 230?
Based at 7.69. Yeah. I mean, the interest rates for reverse mortgages right now are, depending on the scenario, how much money you want, they range from 7.39 to I've seen upwards of mid to high 8s. So the lenders that offer more bells and whistles have a little bit more interest rate, but.
So if somebody who has minimum, old age pension or something, minimum income, but has $2.5 million
Yeah.
home fully paid.
Very common in this environment, right?
Fully paid. but doesn't have the income, like the kids are helping with even the
Yeah.
tax.
So this is a perfect
Tax has
scenario.
gone up from what,
This is a perfect scenario. Like if they're, so in that scenario, $2.5 million home, even if they put like $1 million reverse mortgage on it, but only borrow 200 or 100, just to pay off some debt, get some renovations, and then, you know, whatever. The rest of that money is there, you're not paying interest on it until you actually borrow it. So once a year, you could give yourself a 50 grand injection of cash if you need it or something like that.
is this only for GTA or for out of town too?
Out of town, everywhere.
Everywhere?
Yeah. I mean, as with a regular mortgage, the loan to value would probably be less outside of large metropolitan areas.
Yeah.
And the reason is, you know, it's hard to get, some lenders won't rent it or won't give a mortgage in Sutton or teeny tiny little towns.
Timmins.
So not every lender will lend there, because here's why, it's all about risk mitigation. If they default on the mortgage, if they just shut the door and walk away, the bank ends up, or the lender ends up owning that, and then they have to sell it.
Right.
And if it's not, if there's, like I was trying to do a private mortgage for somebody in Sutton, actually. There hasn't been a sale in Sutton for over $1 million for all those new homes that they built since August. Not one home in Sutton has sold for over $1 million. A lender like changed their tune at the last minute. They're like, yeah, we're not giving you 80% loan to value, we're giving you 70. Because they had no confidence that if something happened, they could turn around and sell that house and recoup their loss. But so in Timmins, they might not give you 40% loan to value, might be less. But it's all specific to the value of the home, how much they want, all that kind of stuff. Any questions about this? Okay. Okay, this is just kind of a summary. 10 ideas, if you ever talk to your client that they want to do like a bucket list trip, they want to buy a cottage, they want to buy a house in Costa Rica, they've got a wedding coming up for their family, they want to gift them a down payment of a house. And anytime you hear something like that, this might be an option. Especially if it's like, 1, 2, 3, 4, 5, like half of these would all mean a transaction for you guys. Right?
Excuse me, what does it mean, great divorce?
That's kind of like a great divorce is, my understanding is like an amicable divorce. So then you could get like 3 transactions out of it. That happened to me once. They sold their house and I sold them each a condo, right?
Okay,
So
We
what
love it when
color
people
is the
get along.
nasty
Hire a
divorce?
mediator.
thank you.
Red? What color is the nasty divorce?
No, I don't know.
Black.
I just heard that came up in the literature, so I just read it.
Black divorces,
Yeah.
Yeah,
probably.
yeah,
The
right?
best one.
So there's different ways to,
More like red.
there's this,
Paying old money.
people think sometimes reverse mortgages are a last resort because they don't really understand how powerful they can be. They're not always the best scenario. Sometimes a small private mortgage might be a great idea, but this has less penalty or less fees up front. And then you don't have to refinance 1 year later. That's the problem with private mortgages. But if it's just like a flip or it's a short-term fix, that might be a better option. But if it's not, this is a better option because they don't have to service this and they don't have to renew it. Like, the rates all change for 1, 2, 3, 5, 10 years because not that you have to requalify for it, it's just they're gonna reevaluate the rates in those terms. So it's still a term, but the actual mortgage stays on the property. You don't have to requalify or anything, it's just a matter of what the rate will be renewed at. Okay? Last question. Touched on this a little bit. So mortgage brokers are like your own personal blank and get paid.
Thank you.
Advisor?
Banks.
Yes.
And the last one?
Get paid by
Banks.
you.
No,
So
no,
it
no,
is-
no,
it's
they get
complimentary
paid by
to your
the lender.
clients.
No,
Yeah.
get paid by
Advantage.
you.
Paid by the
You?
finance.
Yeah, paid by you.
No,
Get paid by you.
everyone else is, mortgage brokers are like your own personal consultants and they get paid by the lender, so it's no cost to your
Yeah.
clients.
Yeah, but the client is paying for it, goes to the lender pays it to mortgage broker.
the lender pays the mortgage broker. The client doesn't pay anything.
But it's
Yeah.
added to the mortgage. The fee is added to the mortgage.
No,
No, that's only in a private, that's only in a private mortgage.
Oh, yeah, we are talking
Or a
about
B
the
mortgage, right?
Sorry.
Like there's A,
Yeah,
there's like A, like sub A, B,
yeah, okay.
private, reverse. So those are kind of like the 5 highlights. B mortgages, some like sub A's and privates all have lender fees where the borrower has to pay that.
Right.
And reverse mortgages, there is a fee.
Yeah.
One lender charges $9.50.
I forgot we were talking about reverse mortgage.
Yeah.
I thought we were talking about,
But this is also in general. This was more like, mortgage brokers are like part of the team, right? Like part of we're the only ones, when you look at insurance, real estate agents, lawyers, we're the only ones that give money and don't ask for money in return. We're the fun ones. That's it. Oh, yeah. So I just hope you guys like learned a little bit, had some fun. And my tagline is there's always a solution if somebody's trying to make something work. Ask, you just get them to talk to somebody because there might be a solution that you haven't thought about. Yeah,
That's great. Perfect.
and that's it. There's supposed to be a big fancy graphic, but it clearly didn't show up.
Thank you, Janice.
Yeah. Thank you.